The perfect storm is coming. Sam Seiden, a financial expert and chief education officer for online trading for Online Trading Academy and professional trader, joins us this morning to give us his top 5 tips to get your portfolio through the storm. First, good morning to you, Sam. How are you?
Good morning. Good morning. How are you?
I'm doing fine, thank you. Tell us first off, what is the perfect storm that you're speaking of?
Well, you know, for a while we've had a nice low interest rate environment, somewhat of a rising stock market, and a stable dollar. But recently, you know, one of those stools, legs of the stool has kind of fallen off, interest rates. So you've got you know, interest rates higher, a dollar that's kind of been stable for the past few years, but overall over the past decade has really taken a big hit, meaning people that the $50 people spend at the grocery store buys them much less. But the big one now is interest rates, and it's very appropriate, I think, that we're having this conversation today because people are going to wake up today with a very high stock market. Most people are aware.
Okay, we seem to be breaking up just a little bit. If you can still hear me, okay, we're reconnecting now, it looks like.
We're going to wake up and there we go.
Okay. All right, proceed. You were saying?
Yes. So you know, today people are going to wake up with a pretty high stock market, and they're going to be happy because they see, you know, their portfolios look good and everything. But what people are not thinking is how to protect that risk. You know, the S&P 10 points higher from here is going to be at a level where we would see it, you know, stop rallying and very potentially turn lower. There's things people that can do to protect that risk, to hedge that risk. There's things people can do to hedge higher interest rates. You know, these are real risks for everyday people. A potential falling stock market from levels a little bit higher from where we're at now. Higher interest rates, which really hurt everybody over the long term. You know, the average person doesn't know how to hedge those risks, but they can.
Okay, what are some ways that they can hedge those risks? Are we looking overseas for investments? Probably not looking at the bond market. The bond market's been not too good of late. What do you say there?
See, and a lot of people think let's go overseas and let's spread our risk around the planet, but they don't realize that most stock markets around the world, you know, rise and fall together. You know, if you look back at the past 10 to 12 years, other than the past 6 months, the stock market has been in this giant sideways range. So the average person, depending on where you put your money in the market, he's either made a little money, lost a little money, or maybe not made any money. I guess if you include inflation, maybe people are down a little bit still. However, if you think of how big banks and institutions during that time, they make tons of money every year. Yet they're buying and selling in the same markets that the average retail investor is buying and selling in. What are they doing so different that the average retail person is not? You know, for example, you can hedge portfolio risk. You can actually buy insurance on your portfolio through the futures market, through the options market, with very simple strategies.
All right, well, Sam, thanks for joining us this morning. Very good information there for folks investing in the like and what to do with their portfolios at home. Thanks for joining us again. Sam Seiden joining us, financial expert this morning. Thanks a lot. Right now, we're going to go to a break. More to come in your third hour of Good Day right after this.